thank you for having us. I wanted to just tap into a little bit of what Michael said earlier. We are at a really interesting time. The evolutionary/revolutionary aspect of what's going on in financial technology is something that the financial firms endorse, they embrace, they want to take advantage of, and there are a couple of things that they're doing really to help along those lines. First and foremost, they're major investors. There's about $16 billion that was spent in fintech last year, and the banks are behind a lot of that money. They're doing things in the payment space. We'll talk a little bit about that and hear about that. They're doing a lot in artificial intelligence. We'll certainly talk about that as well. They're doing quite a bit around cybersecurity and protection. And the reason they're doing that is because they really hold the trusted relationship with these clients and these firms. So they're really at a point, where they're making the investment. And they're making the investment because of that trusted relationship. They find it's extremely important to retain that. And they're retaining that in a number of ways. They want to offer better products. They want to have a good cybersecurity program. I'll give you a little stat. The top 4 banks spent $9 billion on cybersecurity in 2016. Think about that for a minute. Boy, that is a fantastically large amount of money. They certainly want to do it around identity management. They need to do it around authenticating the user. And Tim talked about convenience and trust. The world that we live in really has a lot to do with access and trust as well. Another area that they're really focused on is enhancing the customer experience. And they're enhancing it in multiple ways. The financial firms understand their client very well, but they don't necessarily understand what the client's doing, how they want to interact with them, the kinds of tools and services. And I think as we go through this session a little bit later, you'll see some of that. And they definitely want to embrace that. They're definitely making the investments that are pertinent to that. I thought what might be interesting is we did a little survey work last year on artificial intelligence and big data, and we tried to determine where is that funding going, what's the most important aspect? Customer service. I mean, these firms really, really value customer service. They value the relationship with the customer. They do it at the front line. There is still a bank branch, for instance. There are still some brokerage branches, for instance. They do it electronically. They want to offer the best products and services they can. They're trying to take advantage of some of these newer technologies and offer a good product. Tim had mentioned the loan on the spot. I happened to present after that company at a conference back in November, and it's really changed the way a local practitioner, a carpenter, a roofer, a general contractor interacts with their buyer. It gives the buyer and the contractor an ability to start a project on the spot, 3 seconds, 4 seconds, have a loan to do that in a very small, focused, prioritized way. They definitely want to offer the products in a more efficient, effective, cost-effective way. I don't know if you noticed, though, the third item there is fraud prevention. It is never off the top of the list. It is always critical to understand, what the buyer's trying to do, what kind of environment you're trying to reach them at. Is it digital? Is it mobile? Is it online? Is it in person? And obviously prevent fraud. And then I'll just point you to the bottom here. And the highlights, you still have improved protection in cybersecurity around personal information and improved cybersecurity capabilities around corporate data. So the world is interesting for the financial firms because they're trying to improve customer service on the upper end of that, yet they have a whole series of drags. What are the holdups? What's really, where are they spending their time? And they're spending their time on legacy platforms. And those legacy platforms do a darn good job of transaction processing, payment processing. They're near flawless in execution. When they're not executing, they're near flawless in resolution. So they do put a lot into the service side of it. Very important. And they spend a lot of time with the regulators. The regulators oversee, in the US and certainly internationally, almost everything that these firms do. So what do? They invest in startups. They start with VCs. They partner with them over time. They provide to the technology firms a set of requirements. Here's how our business runs. Here's what's most effective about it. And they learn from each other and develop better products. Eventually, they partner, deploy, and at some points even acquire. So with that, hopefully a little speed version of the financial services space. What I'd like to do is really just go through a quick bio of the 3 panelists, and then if time permits, we'll have a few questions at the end of it. So Cleveland Brown is the founder and CEO of PayScout. He started that after a career in banking, and he started it originally in 2008 as an e-commerce gateway. In 2011, he formed the current version of the company and has been named Inc. magazine's fastest growing private company 3 years running, and a firm that's tops in company culture. Nitin Gaur is from IBM and runs IBM's blockchain labs. Nitin has a ton of experience at IBM. He's been a CTO of their payments platforms. He's been the head of their mobile group. He's worked in the middleware arena as well. He's a team builder, and as I was looking at his bio, I saw that he's put 40 patents forth as part of IBM, but he's now done 70, which is fantastic. So if anybody pushing that kind of patentable volume is just remarkable. And then Jason Marks is co-founder and CEO of Clink, which is cutting-edge artificial intelligence. And there's probably a couple things to note. He's an at-leave professor at the University of Michigan, but he's really taken AI and deep learning to scale. And he's done that in an open source manner. He's done that as a collaborative research partner with firms like IBM, Google, Intel, and the like. So what I'd like to do is maybe turn the floor over to Cleveland and have fun.
Thank you, Chris. You and we're just pressing the green button here. That moves it. I can't speak backwards, so. So let me start off here with the important facts. So thank you for the introduction. My name is Cleveland Brown Jr. If you guys have watched the Cleveland Brown show, there's Cleveland Brown and Cleveland Brown Jr. I'm not related to either one, so I get that joke all the time, so get that one out of the way. If you watch sports, I do know that it is a football team. And I do know they're 0-16, and they haven't won a game, no reflection upon my record. So we'll move that out now. But I know we're here to talk about digital money. And when we talk about digital money, we talk about confidence. Confidence in the consumer experience, and the question that we look to resolve is, where are consumers going to be shopping in the future? So that's the question that we look at. What environments are they going to be shopping in? What platforms are they going to be on? What types of currencies are they going to use? What types of payment rails are they going to be using? What type of security is required to make a positive experience? And these questions are essential because it's important for entrepreneurs and innovators to make sure that there's a seamless, frictionless experience for consumers when they're purchasing goods and services. So the payment space is an ever-evolving ecosystem. We all know the history of payment types, from cash to check to credit card to mobile wallets to cryptocurrencies, and alternative payment networks. And each of these shifts represent an attempt to eliminate friction from the payment experience. And that friction is either the purchasing friction or the actual cost of executing a transaction. So if we look at this from an environment perspective, and 20 years ago, payments were made almost exclusively in brick and mortar, retail, and phone order environments. And obviously the explosion of e-commerce was a monumental shift because you can now purchase online, obviously using a credit card, which was essential instead of picking up a phone. So what we have today is interesting is now the transition to mobile commerce. So we've seen now the phone blend into e-commerce, and we have mobile commerce, meaning people are now shopping as they do most everything on their mobile devices. So technology obviously continues to evolve in order to enable these experiences. So we're seeing digital wallets now start to eliminate friction from the user experience. So you're seeing Visa checkout here. You're seeing the Samsung Pays, the Apple Pays, Android Pay, which is now Google Pay. These are very, very important elements for all of us to follow to make that payment experience frictionless. So what's required really to make these leaps from one commerce channel to the next commerce channel? And the contingencies are twofold. So there's two things that we look at. Number one, we look at user experience. That's critical. Two, the confidence that you have when you're making your payment and that payment is secure. Those are the two requirements. Now, the user experience is always based on technology. So if we let's just go back to e-commerce and look at e-commerce. The limitations of the technology: you got a 2D screen, you have a clicker, you have a mouse, you have a pointer. And that's what enabled your user experience. And transition to mobile commerce, now we have the pinch, the swipe, the touch, the tap. And those experiences are now being optimized, as most of us have probably purchased using our mobile device. So from a consumer confidence perspective, especially in e-com and m-com, people originally were terrified to put payment information into these devices. That's why PayPal was born, that's how Apple Pay was born. And that's why we have all of these different mobile wallets. So when we think about the innovators and technology leaders who helped usher in these new mediums, and then you look at what's most importantly, where are they investing their money? We have to follow the money. So you're going to see some very familiar names, obviously, up here. Facebook, Apple, Google, Star Wars, Amazon. So it's really important to follow where the investments are being made and where the innovators are going. And it's apparent that the world of virtual, augmented, and mixed realities represents the next frontier for the consumer experience. So why we jump to here. So there's an entire reality center here at CES. So if you have a chance, you're going to see a number of articles about the reality center. And you're going to hear about, there's headsets, and these headsets are following your eyes and your retina. These headsets are looking at your neural systems and seeing how they're adapting to the environment that they're engaged in. And what we're seeing now is we're seeing the headsets, prices are dropping. They're rolling out. You're seeing more headsets. You're seeing better quality. Location-based experiences are popping up all over the world. At Disney World, at Disneyland, in China, and that's what this slide is showing here. There are over 3,000 VR arcades dedicated to entertainment in China currently. This is a global phenomenon. And they use these, obviously, to draw walk-by traffic from shoppers, but it's an entirely new space emerging for consumers to engage with brands in a very unique way. If you have not had a chance to, and actually let me see a show of hands. This is interesting because I've been doing this for a few years now. Who has actually have put on a headset and experienced virtual reality? If I can just see show of hands here. Wow. And it doubles every time I do a speaking event, which shows the trend. If you haven't, you absolutely need to stop there at the Reality Center, get a headset on, and the immersive experience will absolutely blow your mind. Now, in the same way the internet opened up all of these new channels for commerce, so were the reality technologies, AR, VR, and MR. And the interesting thing is that commerce, it's already started. It's already here. It's already in the virtual environment. In 2017, we saw the world's first live transaction. It was a real frictionless payment tied to the fulfillment of physical goods in virtual reality. The company I founded, PayScout, partnered with Visa to make this happen. We announced this breakthrough at Money 2020 in Copenhagen in June, and interesting enough, there's another announcement today that we've unveiled the first donation, frictionless donation, done in virtual reality for the benefit of a nonprofit. So we're seeing these advancements move forward. So how do these two critical variables, the user experience and security, how does that stack up in VR? What does it look like? Some of you have experienced the VR. What does the payments look like? All right, here we go. What you would have seen was the first live transaction that took place in Copenhagen in 2017. That's what you would have seen right now. And in that use case, when we talked about the limitations of technology, you would have seen Google Cardboard headset, the mobile device, and the head movement being the cursor, a button on the cardboard that allowed for this frictionless experience of a shopper in virtual reality. And what were they looking for? They were shopping for yoga gear. So as a female shopper looking at yoga gear and having an experience that started with Miss Australia 2014, walk through her day, her experience of what it's like, and tied her to that brand, immediately transferred her into a virtual store seamlessly and to an environment. And this environment really looked like if you were in New York, you're on Fifth Ave, you're on the 45th floor, and you have the cityscape around you, and you have the yoga gear in front of you where you can interact with it, bring it towards you, look at fabrics. Just a really, really great experience. So, as a payments company, we looked at VR as a disruptive technology, and we sought to remove payment friction for consumers, as I said, without taking off the headset. But just making the payment frictionless, that's only one half of the equation. The other half is, can we make it secure? What does that security look like? And we did that by using existing security and integrating our own security into a layered approach to make that happen. And you see the layers of security sitting up here. So that first layer, biometrics. So obviously that begins with the device. So the device, if you have iPhone 10, that iPhone uses face recognition now. We're continuing to see biometrics become part of the equation for device encryption. You have a lot of devices that are using fingerprints and voice activation. The device itself has its own security, the same way it secures our information today, contacts, photos, and how we conduct commerce currently using the myriad of wallets that are included with our devices. The second layer is the mobile application itself. So what you would have seen is someone engaging in that mobile application and had to enter payment credentials in the app and pass those payment credentials and that sensitive information via a secure payment gateway, which is the PayScout payment gateway. And if you're not familiar with what a gateway is, it handles the sensitive information that you have, that payment information, and encrypts it for ultimate authorization of a transaction. The third layer is the digital wallet, okay? And I said earlier that we partnered with Visa in this venture here to make this happen. And the wallet that we used was Visa Checkout. So the wallet, what it does is, if you haven't used it, is it houses your payment information or multiple forms of payment. And in addition, it has your shipping information as well. So at any time during the experience, if we can access the wallet credentials, then we can immediately execute a transaction and have the shipment of those physical goods executed. Next layer, tokenization. So this is really critical. This is really critical to innovators that are designing these incredible experiences. Why is it critical? Is that we can have that information live securely throughout the entire experience. And it can, at any point in time, whether you want to tap, whether you want to gaze, whether or not you're in a virtual store and you're purchasing product, or you're interacting with the content itself. Immediately, through tokenization, we can instantly execute a purchase. So just imagine you're watching a Bond film and you see a pair of sunglasses that you really like. You decide to gaze at those, and immediately those can go into your virtual store for a purchase. That's how powerful the technology is. And the final piece, obviously, here's authentication. Okay? And authentication it's really interesting. We're constantly building new authentication types as we roll out this technology. Obviously, currently it was VCO. So VCO was the username and password. That was the initial authentication in place. And that was stored at the beginning of the experience. We know that you're the correct person to access this information with these credentials. What are we moving to now? So now we're moving into voice recognition for authentication. So we can use your voice and know it's you. We're also moving into retinal scanning, meaning that we can look at your retinas and do something that's really incredible. It's called passive authentication. So basically what's going to happen, instead of getting to the end of an experience and authenticating a transaction, we're already going to know it's you because we've checked your retinas over 1,000 times during this transaction. So we absolutely know it's you when you say, yes, I want to make this purchase. And from a secure standpoint, imagine taking the headset off. What happens then? Well, if your child picked it up or someone else happens to pick up your headset, immediately the retinas don't match and your information is secure. So the layers of security that are built into this experience make for a remarkable revelation. This is one of the takeaways. I want to make sure that if there's one thing you take away from this presentation, that is this. Is the shopping experience in virtual reality is more secure and will create a better user experience. That's not up there. Take a note of that. Than traditional retail commerce, phone orders, e-commerce, and mobile commerce. It is truly the next evolution. So when you think about the evolution of commerce, the sentiment at each turn was that you were moving into a less secure environment. From retail to e-commerce, there was a reticence around, as I said earlier, entering credit card information online. VR commerce is enabling consumers to transcend into that more secure environment. So think about it, even when you go into a retail store, there's counterfeit currency, eliminated. You can get a stolen credit card, eliminated. You can take a fake ID in, eliminated. Because of the layers of securities that are built into these realities, these things aren't possible in VR. So as I kind of close this out and we think about the future of digital money and where consumers will be shopping in the future, where all of us will be shopping in the future, AR, VR, MR, as I said, if you haven't done it, it is an immersive experience unlike anything you can imagine. And for the innovators out there, you can just create these worlds. You know, if you've seen, there's a new movie coming out. I think it's called Reality One. I'm not sure the name of it, but it really dives into what the future of this technology looks like. And Chris brought up earlier financial and regulatory outlook on this technology. And I spend quite a bit of time in DC talking with those regulators and their concerns about security and where is this information being housed. And the reg tech that goes along with this is critical, not only to protect us as consumers, but to make sure that the regulatory bodies and financial regulatory authorities really understand how this information is being stored and used. So as a consumer in the room, you know, my question to all of the brands out there, my favorite brands, is how can I experience and shop for your products, become educated and immerse myself in virtual reality? And we're pushing that medium. Where more and more retailers are looking at giving us and creating those unique experiences. And for the entrepreneurs, for the investors, for the innovators, you know, I asked this one question, and it's really important that you write this question down, and at some point you have to answer it. It's the same way you're going to ask someone, why don't you have a website? Why can't I access your information online? It's the same question. Do you have a VR and AR commerce strategy? Do you have one for investing? If you're an entrepreneur, as I said, to showcase your brand. And if you're an innovator, using the technology to improve your products and services. So there's a learning curve to all of this. That's why I'm here. Like I said, go to the reality section at CES. It's fabulous, and start now. And from there, I will pass this on to Nitin.
Thank you.
Thank you, Cleveland. It was an eye-opening presentation. Glad to be here. Thanks, Chris, for the introduction. Jason, good to be in honor of you guys to be able to present with you. With a show of hands, how many of you think blockchain is real? That's not bad. It's getting better every time. And how do you think, what do you think about the cryptocurrency movement? How real do you think it is? $0.8 trillion worth market cap. Okay. Well, I have, my approach to this presentation is going to be pragmatic. I used to be much younger 3 years back. I've become older because I've been working a lot with blockchain use cases. So I want to bring a pragmatic perspective of where we are. I have 60 slides. I have 15 minutes. So I'm going to speak really fast. But the reason for speaking fast is a different one. When I moved as a student to the United States about 30 years back, so I'm dating myself now, the calling rate to India was about $1 a minute. So you had to speak really fast. You had to have the words per minute packed up into the whole time. Of course, now the times have changed where it's practically free. So you realize that technology changes lives, right? So we are in that era at the moment, and I think, to me, as much as I complain about my gray hair, I think I have the front row seats to the work that we're doing with our clients, right? So I want to provide that perspective to you. I want to provide that everything that you hear, that you read, that you see, the press releases that have happened. I mean, last year alone, Wall Street did about 458 plus POCs, but not a single one has gone to production. There's a reason for it, right? So many of us, and talking about patents, the ideas you get for these patents are the fact that, look, this is not solved yet, so we have to solve this problem before it becomes real, right? Including entities in Bitcoin, Ethereum, that cryptocurrency crazy world space, as we call it. There's a whole lot of challenges we have to solve. So I want to provide sort of a taste of that, of that challenge that I have to live through on a daily basis. I think I'll just move forward. So my name is Nitin, and I think I've moved way too forward. So my name is Nitin. I serve as a director of blockchain labs, and I have a global team. I have a global responsibility, and ergo, I do have the fortune and the stress of dealing with the challenges that we start seeing in different ecosystems, different geos. And I want to be able to provide the fact that today it's not just finance. So this is a digital money forum. I understand that. I want to provide the fact that blockchain fundamentally solves the issue of time and trust. So these two constructs have grave implications on different industries. That includes automotives, that includes supply chain, that includes healthcare. And these two constructs have massive impact on the way we have created these systems, right? So time, again, supply chain, the lack of visibility of containers, the lack of visibility of payment information leads to intermediation where you have entities who are providing that service for you that creates this unnecessary larger ecosystem that we believe blockchain can solve by bridging the gap of ensuring that the information that is shared by multiple participants in an ecosystem is trusted, that nobody can collude, nobody can cheat. The element of fraud that is rampant in supply chain, trade financing, banking industry can be eliminated because there's a certain sense of accountability to that model. So all these use cases that we begin to see in the industry is really aiming towards figuring out as to how do each of these use cases make their respective industries great again. I say that with a grain of salt because in many cases you realize that each of them are poised to disrupt or transform themselves, right? And I have 400 engagements. This is something we announced. It's interesting because if you look at the cryptocurrency space, it's been there for 7 years, and some of us, it's been 4 years since many of us have been talking about applying the technology that's been there in this crazy world to the corporate or the enterprise world that's structured. And in that space, you realize that in past 4 or 5 years, the enterprises are trying to figure out as to how do they deal with the disruption that's caused by some of the players in that cryptocurrency and the related space. And second thing is how they transform themselves. So to me, the conversation that we're having with the clients is more towards the fact that yes, there is some disruptive force taking these two constructs of time and trust and trying to disrupt my industry, and how can I leverage that momentum to transform the way we've done business, right? So these are the referenceable work that me and my team globally have done. We've made some massive investment in terms of understanding technology, understanding the workflows, understanding as to how industry ecosystems have evolved. Because let's face it, networks exist today. We do business today. We do things. And so in many cases, we want to make sure that each of these industries are reflecting upon the challenges they've solved. And the bigger thing that I've realized in the past 4+ years working with some of the enterprises is around the ROI and the use cases. So it's now, to me, it's less about technology, but it's more about what is the ROI? What is the core fundamental constructs in which we can go to business and still make money from it? And then you have this crypto world. So this is the divide that I'm talking about, right? You have this world, this is structured, traditional industries, 100 plus years, and we have been there. I mean, IBM now is a 106 plus years old company. We've been there in that journey of transforming social security, transforming payment systems, transforming manufacturing, data dissemination, data distribution. We've been there in that journey. And so the structure industry is figuring out as to how can I make that process more fundamental, right? More innovative, and remove some of the cost elements from it. And then you have the crypto world. And if you look at the crypto world, you realize there's so much innovation. None of these companies are really tied in any form or fashion with the existing world. In fact, they have this disruptive threat that they impose upon some of the industries, and that threat is a good thing because that leads to more competitive and better systems that we're evolving, right? So each of these use cases represent, whether it's protocol, technology infrastructure, middleware and dev tech, capital and liquidity, which is inching up the overall echelon of providing you with a use case specific elements. So each of these crypto world has a unique value proposition. So the hardest part about my job in the past 4 years is to keep up. With the technical evolution, to keep up with the faults, the flaws, the technology that's behind it, especially on the other side of the spectrum, which needs to be peer reviewed, which needs to ensure that if the enterprise, which is changing the way governments work, changing the way industries work, eventually impacting the way our lives revolve around it. We want to make sure that there's an element of trust built into it. The mathematical algorithms, the technology behind it, the elements of non-repudiation, the reg tech behind it, all has to sync up. So many of the use cases that you may have seen would have shown, look, I have moved a token from point A to point B. But what you may have not seen is the duality of the transaction, that if I'm selling you my house, or a house becomes from a mortgage to a mortgage-backed security, there's a duality to the transaction. How do I address that duality? How do I ensure that the appropriate agencies are informed? So that's the divide. And for us to understand the divide, I look at two constructs here. One is disruption, one is transformation. So if you look at the crypto world, it's all about disruption. There's nothing that the crypto world, and there are close to my last count is about 14,000 ICOs that have popped up in the last week or so. What, is it not a right number? Maybe I'm low, it's in the lower scale, right? But you have all these numbers, and the fluctuation of the fact that markets are no longer closed in the cryptocurrency world. The cryptocurrency world is 0.8, I mentioned the 0.8 trillion, but that was maybe a few minutes back. Maybe it's a different number now, right? So the whole point is that it's moving so fast, there's no such thing as a downtime. You wake up, no matter what time of the night, you check your, and I do have some for experiment purposes alone, you check these crypto wallets, and it's crazy. It's hard to keep up. And we were complaining about information overload. Just imagine the crypto overload that is going with it, right? The point is that this side of the disruptive element of it is there's nothing in that ecosystem that is screaming, look, we are a traditional company, we're trying to make this better for you. So it's not just user experience. It's about ensuring that you're dealing with new economic models, new business models, that this notion of peer-to-peer economy goes to the whole new scale, whole new level, where you have more control of your finances, more control of your money, more control of the information that you're supposed to own. And this is where we extrapolate those concepts and say healthcare, which is an American problem, for the fact that we really have no control on the information that's supposed to be ours, right? So how do we create the consent around that information, right? So there's nothing in the cryptocurrency world that is conforming to how we are living our lives, how we are consuming services, how we are consuming healthcare information, so on and so forth. Whereas the industry, and this is really funny because this is getting better over the years, but last year, pretty much every company, every use case, we had let's put a blockchain on it, right? So there's a blockchain for it, essentially. It's like a nail that everything was you had a hammer called blockchain, and everything was a blockchain problem. And so eventually the industry is maturing, and we're figuring out as to what is the fundamental difference between a quote-unquote database versus a blockchain. So the structure industry is trying to figure out as to how do we transform ourselves and align ourselves with the new business model that's evolving and still stay relevant to that industry, right? That's the divide. And I'll tell you, it's the most complex way because we understand the way things are done today, or at least we think a payment ecosystem is very complicated. I used to run mobile payments, and that's half my gray hair is figuring out the whole payment ecosystem that goes with it, right? Figuring out the notion of experience and security that Cleveland talked about, right? So that's the fundamental element. So as you embark on this new currency and new complexities, you start looking at, and I'll tell you, the notion of digital money is not new. If I'm not mistaken, and correct me if I'm wrong here, I think 11% of our US GDP is in cash. The rest is all digitally transferred in terms of ledger entries. So the notion is not new, which means that we already have a concept of digital money, right? And then you have all these definitions around cash, around how do we do RTGS systems in different countries, how do we transfer value, how do we restore value, and that ecosystem makes it more complicated. And next thing you know, you have cryptocurrency, which further complicates the issue. So one aspect of my job, and all our jobs in this room, is to simplify that ecosystem. That the reason why we have some of the downstream systems of reconciliation and settlement and clearing is because of the system that we've created in terms of moving value. And I think in many cases, cryptocurrency has the ability to not just store the value, but also have the ability to move the value, ergo, eliminating the need for reconciliation, which is the half of the challenges that we're trying to solve with blockchain today. I'm going to leave that, just keep that back of your mind, that that's something which is, to me, a big focal point of what we're trying to solve as an industry. So going back to basics. So great, we can solve world hunger, we can solve everything with blockchain. I want to go back to fundamental tenets, and I've written extensively about these areas. And in terms of as to what we should be doing, blockchain is about the use cases is about trade, trust, ownership. Fundamentally, that's essentially what we're trying to solve. If you're not doing these three things, then you're using a database. Duality of a transaction. We have to realize that, and smart contracts essentially glue those two elements of it. Focus cannot just be on digital assets. So this is tokenization of assets, a bit different concept from payment tokenization, but essentially in concept they mean the same thing, that if it's a house and I want to own an instance or fraction of the house, how do I tokenize that and create smaller tokens from it and things and those around it. One thing we choose to ignore, which is no longer the case because as we're maturing we realize the value of it, is notion of digital identity. If I have to truly operate in the digital world, I can no longer show my driver's license as a proof of identity. I have to have some element of digital identity that allows me to link this digital tokenized asset to me and allows me to transact with another entity, especially in a peer-to-peer world that we rely upon. Non-repudiation, accountability, regulation, all that has to be tied towards who you are and who you claim to be. Second thing is, if we are solving, and this is my focus in the past 2-3 years, I have taken a different point of view now that all the use cases that I've done for Wall Street, for financial services, for capital markets, capital market infrastructure, has been around the reconciliation of ledger entries. And I think that's not enough. Because all we're doing is solving one facet of that equation, but not the other equation of settlement. So which means that I can reconcile all the entries I want, but I still have to wait till the money moves to traditional rails, which leads to the question, what are we really solving for that matter? And then eventually, two things which is really, really important for us, digital fiat, which is digital fiat as in digitized version of your fiat currency, central bank issued, not really disrupting a whole lot, but the moment we embark on the digital fiat strategy with digital identity, you realize a lot of our financial system that we have created over the past 100+ years is automatically simplified, right? So these are the few things that I would like us to think about as professionals, as industry leaders, as to what we're looking at. My focus, I wrote a blog post on this. It was really crazy, the way it went viral around this piece was the fact that I want to focus on these things. And I want to focus on these things for 2018, because if we don't do these things, blockchain will still be a proof of concept. Blockchain will still be sort of this romantic idea, but for it, and I joke with my clients that it's about time you put a ring on it, you commit to a use case, and go through the pain point of figuring out as to what needs to be done. Digital identity, digital fiat, asset tokenization, there has to be an element of that if a central bank is issuing currency, then what is the issuance mechanism? What's the token vault? How do we deal with the economic systems or the fiscal system that we have created to control the supply of money? This is things like quantitative easing and ensuring that we are able to retract the money and yet not infringe upon the individual rights in terms of owning an asset, owning a property, owning currency per se. And it's a gray area because as you go towards digital way, you remove, especially in some countries, the notion of corruption, the notion of unaccounted money, because suddenly now you have an accountable element of tying a digital fiat to a digital identity and ensuring that the visibility is there for the central bank, because central bank is the issuer of that token. So there are technical design for it. We have technology. I think it's more towards the ecosystem that revolves around it. Second thing is, the last 2 or 3 parts is the business of blockchain business models. I wrote another paper on this topic where 90% of my projects have come to a screeching halt because yes, we've proven those technically, especially capital markets and financial services use cases, but I have to build an ecosystem and we have to figure out the element of who's investing in this and who's paying for it. This is the economic model, which is, by the way, automatically built into the cryptocurrency world. And that's the divide that I'm talking about here. And lastly, governance model. So at the end of the day, this is the focus areas. So there's a lot of challenges, a lot of complexity, but there's a pragmatism that we have to go with the hope to fully realize the promise of blockchain is if there's a takeaway from our side, and we've seen this with internet, which is information network, we begin to start seeing that with the asset network or network of trust, is there's a convergence. So this crazy teenage world of cryptocurrency and ICO, it's creating amazing technology, which this world of structured world that we live in is trying to consume. But eventually there'll be an acceptance, which is why we all are here, right? And eventually you'll find convergence and acceptance of some of these things that are proven. And of course, it's evolutionary, which means that things that are weak, things that cannot protect the consumer, you and me, they will eventually dissipate. So that's the message that I have. And that's the 60th slide that you're watching. Thank you so much.
Thank you. Good. Very interesting. Yeah, cryptocurrencies fascinate me. So in another life, I'm a professor of computer science and engineering at University of Michigan, and there's a really sharp student in the Ross School of Business that created a cryptocurrency trading club. So he got $17,000 from a wealthy board person, and then he picked 17 students and gave them $1,000 each to invest in cryptocurrencies. And you'd be surprised how rich some of those students are getting up to now. Cryptocurrencies is a fascinating kind of movement that's going on right now. So, but let's switch gears a little bit. So I'm going to talk about artificial intelligence. And there's 3 things I want to accomplish on stage today. So first, I want to talk a little bit about conversational AI, what it is, why we're here, how we got here. I want to then talk about trends that we're seeing in the market. So we have a company that is trying to bring the best possible experiences with the science available to our lives from a conversational AI perspective, and we're in production and we're learning a lot. So I want to share some of those lessons. And then I'll show you a demo of the experience. So I realize many folks in the room probably have never seen the Clink experience, so I want to accomplish that today too. So let's start with number 1, conversational AI. So, I'd like to bring a different kind of perspective to what's going on, right? So we're kind of riding these hype cycles. We know that this is the thing, right? So why do we do AI? We do AI conversationally because that's how sociologically we have evolved to reason about intelligence, right? When you want to access intelligence, you think about that really smart individual that you can go ask a question to. You want to interact with a conversational experience to access intelligence. So conversational AI is fundamentally a means at which we want to access intelligence, right? So what's been happening? So, and this is the perspective from myself and observations. I'm actually working on a small book project talking about conversational AI, the death of chatbots, and the rise of real conversational AI. Stay tuned. But so where did we start? We started with Siri, right? That was one major event that socialized the idea of having a virtual assistant that you can talk to, and that had scale when it came to deployment, right? So we started with that, and then the other big players started having entries, right? Google had to follow suit. Now Google has the best experience of the 3 companies, Google, Apple, Amazon. Google's ahead of those 3 companies trying to do general AI. Nobody has actually adequately addressed enterprises and anyone that wants to create their own domain-specific AI experiences. It's not addressed, right? What Google gives you right now to build your artificial intelligence experience on Google Home and Google Assist is API.ai, which was an acquisition. Why doesn't Google give you what they use in-house to build their experiences? It's because it's hard to wield. And I'll talk a little bit about this when I get to the second part of this talk. Wielding conversational AI is difficult for enterprises because it requires it has required some of the most talented machine learning and data scientists in the world, and there's very few of them that know how to wield that technology to build experiences. Okay, well anyway, where are we? So we started with that. Then we had this chatbot hype cycle, right? Facebook said, okay, let's take Messenger and create these bots. And initially they started with a human-assisted bot, right? And that created a new hype cycle of chatbots. Now, the nice thing about chatbots is it requires less AI to work. When you actually access a chatbot, you want to use keywords. Balance, I want to get the balance. Spending, I want to get my spending, right? You don't want to actually say something confusing and messy. So that's been nice, but it turns out that the experiences with chatbots kind of suck, right? They haven't been that good when it comes to actually accessing the chatbot as a conversational experience. So this was realized. So then what happened? Chatbots devolved into point-and-click interfaces, right? Quick replies. So if you use a chatbot that's useful to your life, let's say Domino's ordering a pizza, you'll never actually interact with it with natural language. You'll interact with it by clicking. What do you want to do? It gives you 3 options. You click, order a pizza. What kind of pizza do you want? It gives you 4 options. Crust, thin crust, et cetera. So we essentially have graphical user point-and-click interfaces in the chatbot land. And that's where we are there. And on the voice channel, we have very, very terrible third-party experiences that go out of outside of the domain of your Google Assist and your Alexa in-house, the out-of-the-box Alexa. Not the things built on the Alexa train-your-own skill stack. That's a different technology than what Amazon uses to build their experiences, right? And so that's where the world is, right? There's such pain in the world right now because folks cannot build conversational experiences because all that's available are these classic older approaches where you have to use keywords and dictionaries and synonyms and rules to build these experiences, and they break. But the expectation of the consumers is that Google Assist. When they get in that car and they want to talk to the car, they don't want to talk to the voice interface that they've had for 30 years, right? We've had play track number 4 as a conversational experience in cars for 30 years, right? So they want an experience that feels like that natural human in the room kind of experience. So that's where we are today, and it's a major, major pain point, right? So when you see experiences deployed from anyone outside of those 3 companies, those experiences have been disappointing, right? Now, the promise has been the same. Here's a virtual assistant you could talk to like human in a room, but they've been fundamentally disappointing. Okay, so that's a problem in the community that some folks are trying to solve, and I think that that's the holy grail, right? How do we democratize that technology? How do we take the experience of Google Assist and disseminate that to conversational experiences everywhere? Now, there's some attempts out there, right? Like if you look at Microsoft Cognitive Services, they give you a tool set to build your own. What we found in the community is anytime there's a toolkit to build your own conversational experiences, it's like giving knives and scissors to 4-year-olds, right? Companies hurt themselves. They spend a lot of money, and then they end up with these experiences that aren't great. That is a problem that we're trying to solve intellectually from a research standpoint and commercially at Clink. Okay, let's talk about part 2. I want to create value for you guys. I want to share with you guys what we're learning, on the frontier of the movement that's happening in conversational AI. Okay, so we've actually had a phenomenal experience in production. So we're working on that problem. We're trying to create experiences better than Google Assist, and then make it so that enterprises can wield that technology without hurting themselves. We're trying to solve that problem. It's not been solved yet in the world, right? Right now, there's no company that's creating experiences that rivals the best of what Google has to offer in-house. And we're trying to solve that, and I think we're going to solve it this year. We have an approach to solve it this year, and I'll show you some of what we've built so you can see that differential in that experience. What are we learning in the market? Well, let me just say before I forget, we're doing a test and learn environment that's open to the public. And so if you go to clinic.com, you can sign up for an Alexa skill, a Google Home experience, where you actually access our conversational experience that feels like a human in a room. And you'll see it in a little bit. So what are we seeing in the market? It's fascinating. So how many people in the room have used a chatbot and had a good experience in the last 6 months? OK, good. You guys are lucky. How many people have used a conversational Alexa, Google Home, et cetera, and had a good experience in the last 6 months? OK, good. And so, that's where consumers are moving. That's what's working now, right? So, we're actually working with a number of customers, and we're taking our awesome AI and we're making chatbots out of it because that's what they want, because they're listening to that hype cycle, and that's fine. We'll do it because you pay us a lot of money. That's fine. But really, what we have seen work well in the lives of humans is conversational experiences. So we have an Alexa skill that's released to thousands of people. Actually, we've signed numerous deals that's going to be rolled out to the masses from our marquee customer, USAA. And that's been a wonderful experience, right? And so I'll share some of that with you on stage here today. So that's one lesson, right? If you want to start somewhere and create value in the world, start with a great experience behind a home device, a conversational voice experience. We've done an integration into a mobile app where we conversationally enable transferring money. So you can say, hey, send $100 to my mom real quick from my checking account. That saves you like 17 taps and clicks and fiddling with your mobile app. Making things easy, and having it work reliably is exactly where we need to deliver in order to create great experiences for humans. So be wary. So we've been dominating financial services, the fintech world. We're pretty much good there, and now we're looking at other areas of need. But be wary, right? If you have to have a manual to learn how to use your conversational interface, something's wrong. You should just be able to say, this thing knows about your spending, go nuts. This thing knows about how much money you have, go nuts, right? If you have to learn the commands, of how to say things, you're losing. So I was gonna demo on the laptop, which I normally do, but I'm just gonna demo using this app. I realize that you should be able to hear it because it's gonna talk out loud. And I'm just gonna show an experience that demonstrates the value of human in the room level understanding, natural language understanding, not scripted, not rules-based. And so you can imagine on an IVR, when people call in, they don't want to learn how to use your conversational interface. They just want to talk. So imagine a conversational interface for opening an account. What might a user say? Hey, I need to open an account. Could you help me with that?
To open an account, I will need your name, address, and the type of account that you would like to open. What type of account would you like to open?
Well, my name is Jason Mars, and I live in Ann Arbor, Michigan.
Okay, your name is Jason Mars and your address is Ann Arbor, Michigan. What is the type of account you want to open?
Well, actually, my full address is 123 Elm Street in San Antonio, Texas. And could you change that last name to Smith?
Okay, your name is Jason Smith and your address is 123 Elm Street, San Antonio, Texas. What is the type of account you want to open?
Thank you guys so much. Make it a checking account.
Talk to me about your bank account.
All right. So the noise captured it. But what I want to emphasize is conversational healing. You could say, give information in any order at any time. So I can do all of that. So there was multiple turns. There's no rules or scripts to the number of turns. Let's do it all in one turn, see what happens. Hey, so I want to open a credit card account. My name is Jason Mars, and I live at 123 Elm Street in San Antonio, Texas. I think that's all you need.
Let me confirm your open account request. I have the type of account you want to open to be a credit card account, your name to be Jason Mars, and your address to be 123 Home Street, San Antonio, Texas. Is this correct?
You can say yes, of course. You can say, yeah, that's correct.
Okay, I've completed your open account
And
request.
there's no rules. You can give information, change information, correct the conversation at any time. You can say things in messy, convoluted ways. Hey man, I need this new account real quick on like credit cards, but so I can buy more stuff. Let's see what happens.
Talk to me about your bank
Didn't work. All right, I'll talk to you about my bank account. Help me open an account for a credit card ASAP.
Okay, the type of account you want to open is a credit card account.
Right.
What is your name?
And so, I gave it a credit card account. I can say, help me open an account. My name is Jason Mars. It'll take that information. So that's human in the room level understanding. That's what you need on IVR. That's the tippy top of the iceberg. So if you want to learn more about what we're doing at Clink, just go to clink.com. But let me just say that the nut that we're trying to crack, so we cracked the nut of doing something, solving a problem for real in financial services. So our projections when we raised Series A, you guys are going to love this because I'm going to share some data. Our projections when we raised Series A was a certain amount, and the investor laughed at us. He was like, that's ridiculous. You'd be the fastest growing startup ever. I'm going to ignore your projection, and I'm just going to invest in you because I like you. And so we did that. We have quadrupled that projection last year, 2017. We ended quadrupled. We want to do another quadruple this year. Financial services, fine. We'll get to 50 million, 100 million ARR in financial services, good. But we're trying to change the world. So the nut that we want to crack this year is we want to be able to impart the skills and the ability to train any experience at that level in any institution, right? We want to be able to empower enterprises to wield conversational AI, which is an unsolved problem. And so I'll wrap this up. That's what we're trying to do. Would be delighted to chat with you guys more. Stay tuned for more that we're working on here, and look out for that book on conversational AI. Thanks so much.
All right. That was great. Thank you.